American Express just reporting the earnings coming in at $2.40 a share. That's a big miss. The street was looking for $2.66. Revenue did beat. It came in at $4.28 billion. It beat expectations of $4.03 billion. The bigger news here is that the company is actually affirming its full-year guidance. Steve Squeri saying that they're still looking for earnings of $11 to $11.40 a share for the full year. Revenue growth still on track for 15 to 17%. And if you look at what American Express did last quarter, it was a big miss for the last quarter, too. However, the company then kind of came out and said, it's okay, we're still on track for the year. Amex does not give full-year guidance, or does not give quarterly guidance. It gives full-year guidance only, and I think this is a case where the analysts on the street look at it and divide it by 4 and say, okay, you're going to hit each. I spoke with the CFO, Jeff Campbell, at American Express. He says, look, the way you should really look at this is their revenue goes up every quarter, expenses stay fixed, so they get more and more profitable as the year goes on. So, again, you're not going to see this on a quarter-by-quarter basis, just breaking down 1/4 of it. You're going to see earnings build through the quarter.
But macro
sounds very good.
But the company, this is how it's being characterized, that the credit card giant set aside more money to cover potential losses?
It set aside reserves. It's got reserves that came through, if you're looking at this, first quarter provision of losses of $1.055 billion.
Which is more than they thought. Yeah,
it's not out of line with what the company was expecting. But again, the company gives guidance on an annualized basis. The street looks at it a little bit differently. The company's saying it doesn't see anything differently from what's going.
But they've got the best.
But they've got the best clients, the best customer.
And if they're having issues.
Well, if they're not. If you look at it, they say revenue was up 22% from a year earlier to reach a quarterly record. Card member spending was up 16% on an FX-adjusted basis. And T&E, travel and entertainment spending, up 39% on an FX-adjusted basis for the month of March. They saw a record level of reservations that were booked. Again, I spoke with Jeff Campbell, the CFO. He was watching the Jeff Kirby interview yesterday from United, who was on here. Remember, Jeff Kirby said that they saw a drop in bookings, in reservations.
Scott
I'm sorry, Scott Kirby. That took place. Jeff Campbell is the CFO at Amex.
So
saw a drop in reservations. Amex didn't see that at all. And in fact, they have a huge travel reservations company. Didn't see any dropping there. You know, you might wonder what happened. United does have a big San Francisco hub, so maybe some of that with the SVB was a pause in spending, particularly in San Francisco, but they did not see it at Amex.
So this Reuters report, the growing economic uncertainty in the United States has slowly begun to catch up with Amex, which had been relatively a better position because of its wealthy customers. A persistently high inflation rate and a rise in borrowing costs has begun to pinch customers.
I mean, that might be a reporter looking at it saying that they missed it. They missed expectations.
Just making this stuff up.
266. It could be. I mean, that would be my expectation.
But I'm just trying to figure out whether we can glean anything from this about the overall economy.
No. In fact, what he said on this is that they are still looking at customers spending like crazy, traveling like crazy. You may see some lower growth in areas just in retail spend and generalized merchandise that's out there, but it's still growth, and that they haven't seen things drop down. Probably not a huge surprise to see some of those things when you compare what was happening a year earlier. In January, you were still dealing with COVID. They see things picking up from an international basis for the first time in a pretty significant way, too, as Asia opens up. And they just say that they are right on track with what they thought for the year. Again, if you look at what they're expecting for the remainder of the year, that means they do expect to make up some of the earnings numbers that they missed this quarter for the remainder of the year. So it just happens as revenue builds and your baseline stays the same. American Express missed last quarter by a lot, but the stock still ended up 10% at the end of the day. So we'll see what the street thinks as they look through some of these numbers.
But I'm just wondering, is that we don't know whether that was the loss, the provision for the losses was in line with what they were expecting.
Was what the company was expecting. Maybe not with the street. I don't know what the street's estimates were for those things, but the company.
Here's the Dow Jones. American Express first quarter revenues rise as Americans keep spending versus Reuters.
You've got people who are reacting very quickly to headlines, trying to figure out what happened.
Right. People that are writing these things. Maybe it's ChatGPT.
Oh, wait.
Some of it probably is.